Good afternoon. You're watching Businessworld live here on One News. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Friday. Okay, not a good end to the week for local stocks here. Shares just had its sharpest plunge yet since June of last year. And all of that happened right before close. All day long, shares were poised to end in the red, but somewhere within the 6,500 level. But a last minute sell off ensued, pulling shares lower by 3.6% to 6,320. So, what drove that? Manny Cruz of Papa Security says anticipation that infections will further surge prompted some funds and investors to sell. Recall that COVID cases in the country hit the 12,000 mark yesterday for a second day, reaching new peaks since April this year. Other than that, Cruz says the recomposition of the PSEi is also causing funds to rebalance, adding to that market volatility. But really, you have your two blue chips that were sold off right before close, even surpassing declines here by the main gauge. I'm talking about SM Prime and SM Investments. SM Prime, looking at this chart right here, represented by the white line, also had that sharp drop right before close, ending the day lower by 3.9% to 32 pesos and 25 centavos a share. SM Investments, on the other hand, as reflected by the orange line right here, also has that last minute sell off, going lower by 6.8% to 912 pesos a share. But there are still winners here, starting off with Security Bank. The day's best performer so far, at least for Friday, up 4%. Right after session close, the lender reported a net income of 1.5 billion pesos for the second quarter, pushing first half earnings to 3.1 billion pesos. Revenue also came in at 9.6 billion pesos, increasing 9% on a quarterly basis. Net interest income also rose by 4% to 6.9 billion pesos. Security Bank now at 117 pesos a piece. Let's see how the latest earnings report here by Security Bank will affect their movement come Monday. But outside the main index, there are also winners here. Converge, for one, rose as much as 8.2% to hit a record, but tempered those gains before close. The company said it is on track to maintain strong sales growth this year as it inches closer to a subscriber base of 1.7 million by the end of the year. Converge, set to join the main index next week, ends the day at 27 pesos and 35 centavos a share, up by 1.9%. Lastly, while we're in the telco space, might as well take a look at Dito. We had their Chief Administrative Officer, Adel Tamano, earlier in the show. He said that they will be entering the broadband market with friendly user tests already being conducted. He says that has always been part of the plan. It's just that the pandemic has slowed things down for them. They're looking to launch early next year. But in the telco space, at least he says they're on track to hit 3 million subscribers soon. Despite that optimism, Dito joins the sell-off today. It's at 7 pesos and 76 centavos a piece, down by 0.9%. Here are other headlines we're keeping our eyes on. President Duterte has accepted the resignation of Budget Secretary Wendell Avisado. Palace spokesman Harry Roque says Avisado's resignation was due to medical reasons. Roque says DBM Undersecretary Tina Rose Marie Canda will be designated as officer in charge of the budget department. Avisado's resignation and the corresponding shakeup in the DBM comes at a crucial time as government tries to find additional source to fund COVID-19 response. As it is, the Philippines remains in high-risk COVID-19 category, with infections nationwide climbing by 30% and average daily cases rising on a weekly basis. The health department says all the capital region and provinces under the NCR Plus are showing steep increases in their COVID-19 cases. Other high-risk regions include the Cordilleras, Central and Western Visayas, and Northern Mindanao. The health department says that there is no shortage of medical-grade oxygen in the country despite the rise in infections. The National Task Force says it's still too early to see the impact of stricter lockdowns in Metro Manila Deputy Chief Implementer Vince Dizon says this as daily cases reached 12,000 for a second straight day on Thursday. He says the government target is to continue vaccinations and provide cash assistance during the period. Dizon says over 26 million vaccine doses have been administered. An additional 2 million doses of Sinovac arrived in the country on Thursday, while more than 570,000 doses of AstraZeneca for the private sector landed today. 15,000 doses of Sputnik V vaccines are set to arrive this afternoon. As COVID cases reach new highs in the country amid a threat of the Delta variant, several think tanks have decided to lower their growth expectations for the country, one of which is Fitch Solutions, which now sees the country growing slower at 4.2% from their previous forecast of 5.3%. To further discuss why this is so, we have Michael Langham, Senior Asia Country Risk Analyst at Fitch Solutions. Good afternoon, Michael.
Hi, thanks for having me on.
Thank you for joining us. Again, what are the major factors here for that downward revision?
Yeah, so unfortunately, it's this Delta variant outbreak that, isn't just unique to the Philippines. We're seeing it in other ASEAN economies, think Malaysia, Thailand as well, having some of their worst outbreaks. And because this variant is so infectious, we're seeing hospitals overwhelmed, and unfortunately, the kind of lockdown measures that were implemented last year being rolled out again. For now, in the Philippines, we just see stricter lockdown measures in Metro Manila, but it's likely that these measures are going to have to be extended and rolled out across the country to really suppress this outbreak, and that's going to prove a problem for the economy because just so much of it is reliant on domestic activity being allowed to resume, and that can't be the case when mobility restrictions are in place.
Mm-hmm. Now, good thing that you mentioned that. I mean, looking at second quarter figures here, growth at least year on year was at 11.8%, but quarter on quarter that contracted 1.3%, even worse than expected, owing to restrictions that were imposed back in April. What does that say then about growth prospects for the third quarter now that we find the capital under the same circumstances, even has stricter mobility curbs?
Yeah, so again, it really is a story of how quickly the Philippines authorities can get a handle on this outbreak and the extent to which lockdowns are implemented across the country. Now, I think what we've seen compared to maybe last year when the initial outbreak occurred and we saw lockdowns is that industries have adjusted to such disruptions in terms of lockdown measures, more people working from home or preventative measures put in place in the workplace. So there are some differences to last year, which should see activity at least somewhat higher than it was during lockdowns last year. But that does mean that the growth recovery won't be as strong as maybe initially hoped at the start of this year. The other thing I'd add into that is that, okay, while the Philippine economy isn't as dependent on external demand as, say, Thailand's economy or Malaysia's to a lesser extent, external demand is stronger more broadly on a global basis. The global trade cycle has picked up, and that should help some of the more exporting sectors to boost output compared to last year's levels. The other final point I'd make is that it took the government and policymakers a bit of time to enact a fiscal and monetary response to the initial outbreak last year. These measures have been in place now for over a year, and really the monetary conditions should provide a buffer for sentiment, ensuring that it doesn't fall too much further. because companies and households know that they have that liquidity there. On the other hand, fiscal support has been in place and budgetary measures have been allowed to roll out in the knowledge that this pandemic was going to be in play throughout this year. Yeah, so I'd say we do see some, that's why we're still forecasting a recovery, but we've rolled back our expectations.
Now, good thing you mentioned that as well. I mean, yes, at least fiscal policies are now in place for the year, but are there worries as well that at least will remain constrained for the remainder of the year?
Yeah, so that is something that I think policymakers are now having to deal with. The initial policy response was that some fiscal space would be left for this year and next in terms of not front loading the fiscal response last year, because policymakers were aware that this issue could be in play for a multi-year horizon. But what we're seeing now is that because of the improved outlook for developed markets, there's a kind of disconnect between emerging market recoveries and the developed market recoveries. And what that's doing is putting pressure on external financing and squeezing policy room for emerging markets, not just the Philippines. And that is making it harder to say increase the fiscal expenditure plans or even ease monetary policy conditions further, because what investors are looking towards, the outlook for the US, the outlook for the Eurozone, where these economies are rebounding, and maybe the central banks there are beginning to think about rolling back some of the stimulatory measures. So there's that disconnect, and it's putting pressure on emerging market policymakers, including that of the Philippines.
Okay, now also much of our economy hinges, of course, on domestic consumption, household consumption. How is this latest surge of cases going to affect sentiments moving forward?
Yeah, so we've seen consumer sentiment hasn't really recovered from the initial shock of the pandemic. Reasons behind that, well, unemployment's, every month that this pandemic rolls on, certain jobs are just lost to the pandemic. Longer term unemployment has become a factor, and we've seen labour market participation rates fall in 2020 and 2021 relative to 2019. The other thing we've seen is that real wages have contracted, but partly because of elevated inflation, but also because of these issues around the labour market, and because the labour market has loosened as it has. There's downside pressure on wages, which are again affecting household incomes. The other point I'd make is that households have begun seemingly deleveraging in terms of consumer credit growth. It's been in contraction through the early part of this year, and that would indicate that consumers are, switching to a more savings-based approach, maybe less willing to take on debt in these conditions, implying that there are some underlying weaknesses around the consumer outlook. Now, the extension or implementation of further lockdowns essentially means that consumers and households are again going to face shocks to incomes, and that weight on sentiment, which will likely spur further savings and weigh on consumption.
Okay, now, given all that, when do you see the country bouncing back to pre-pandemic growth?
So we're expecting the economy to really reach its pre-pandemic level by late next year, and that really is, the last few months of the year. But again, much of that rests on the ability to roll out the vaccination program, as well as the extent to which new variants come on board and how those play out. The economy is going to have some longer term impacts from this pandemic in terms of long short-term unemployment, higher domestic debt levels, both in the private and public sector. And that really is going to mean that longer term, much will be needed to do around structural reforms and boosting productivity within the economy to help return to pre-pandemic trend growth.
All right. Thank you very much for your insights and your time this afternoon. Again, we have with us on the show Michael Langham, Senior Asia Country Risk Analyst over at Fitch Solutions. Thank you.
Thank you for having me on.
And those are the biggest stories this trading day, August 13, 2021. Catch Businessworld live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos and we are One News. Mask on, wash hands, and stay safe. Philippines, have a great weekend.